We looked at the coordination of economic policies under the new systems that they've established. We look at the mechanisms they've put into place for risk reduction, for sharing risk, pooling risk as it's known. We looked at the extent to which there's democratic accountability for the actions they're taking, and then further measures that they propose, such as setting up a Eurozone treasury, perhaps having separate institutions for the Eurogroup as a whole, and a different role for the European Parliament. So it was fairly wide-ranging. What we looked at as the proposals that are on the table that are currently being implemented, as well as those that are proposed for the future. So in terms of risk reduction, which essentially means that they think they've got the mechanisms in place, but they want countries to run balanced budgets, they want policies, economic policies to reflect competitiveness, and other measures along the line, structural measures, to improve the ability of countries to manage their finances. That's what was meant by, on the whole, by risk reduction. And those measures are more or less in place, but the question is, are they being adhered to? Well, the elements of risk sharing that are touched on in the report are a common backstop to the Single Resolution Fund, for example, the creation of a European deposit insurance scheme, rolling it out, creating it and rolling it out. And we also look at whether the issue of fiscal transfers between member states is one of the things they may need to do in the longer term. Well, first of all, we have to appreciate that the City of London is the world's largest financial centre. The health of the Eurozone impacts on us in the UK hugely. For example, the city buys and sells twice as many euros as the whole of the Eurozone alone. Our trading position is hugely impacted by the health of the Eurozone. So the impact on us in the United Kingdom is hugely significant. But of course, there are other things coming down the road, such as the Capital Markets Union, where again, our institutions are very well placed to benefit from that, because they're the kind of institutions that do a lot of work in that area anyway. But beyond the pure economics of it, it's also singularly important for our government to keep a watchful eye on what happens next in terms of the institutional structures that are put into place to serve the completing of economic and monetary union. For example, such as a separate Eurogroup, a Eurozone Treasury Minister, for example, or separate mechanisms for the European Parliament to carry out its scrutiny functions. So it's a balancing act, naturally wishing the Eurozone very well, but also being very aware that our interests are engaged and being alive to the possibility of needing to protect our interests where necessary.